Hi there, traders. This is Brad Gilbert with the weekly kickoff. All right, now we've finally got the nail in the coffin for the US numbers. US non-farm payrolls numbers hugely weaker than the forecast, right? So let me just flick you over to that because this sets us up for the dollar to sort of take control again, I think. But there are a few repercussions which may sort of make you a little bit confused, but I'll explain those as we go. Non-farm payrolls 114, forecast was 175. Not quite below the minimum end of the range, but the private payrolls came in weaker. The unemployment rate blew out to 4.3, okay, and 4.1 expected. So we got those weaker numbers that we were looking for. Even average earnings were a little bit weaker. So that sets us up for a dollar move. Now, this is where the markets get a little bit confusing sometimes, right? Now, the euro has been the sleeping giant, right? We need euro to participate. It's like getting dollar yen back into the game. And dollar yen, the trade alert I sent out on Friday, pretty much went textbook, right? But we'll come back to that. So euro shoots to the top side. Now, the whole drop off in the US numbers, and in particular the US employment numbers, you see the Aussie and Kiwi, and actually dollar CAD for that matter too, the commodity currencies. Now, there's a big question mark over global growth. Will global growth shrink? Excuse me, because the world's biggest economy, the US, is now sort of like not disintegrating, but really falling away. And that sort of puts a little bit of extra pressure on the Aussie, Kiwi, and CAD. And you don't see the gains that we saw in euro and obviously sterling as well. And there's a bit of positive euphoria starting to come through on sterling with regards their interest rate cut last week, right? So, you know what? Usual markets, cut rates, it goes down. But we've got the US in a situation where they're definitely going to be cutting in September. The positive outcome from interest rate cuts in the UK, we're getting sort of, this is where the fundamentals, you've really got to be patient, wait for them to sort of settle and then understand what's going on. Excuse me. So euro back in the game, right? Up at 109.08. Right at the moment. So this is good, right? It's going to reinvigorate the market. If I have a look on the daily charts, this might explain a bit more about what I was sort of just talking about. So euros just come back, funnily enough, and just tested right on that trend line. Now, sterling, it didn't go as far, and same with Aussie and Kiwi. Primarily, these currencies were or have been in a downtrend, right? So that 1 week US number, it's not the be all to end all, but it's a great directional move for the dollar. But the other currencies are already going down. So they're not going to go up as dramatic as we would like. Okay. Euro, as I said, has been waiting for something to wake it up. And this is it. Now, with the global growth situation, right? This is where the markets sound a bit stupid, right? So US economy looks like it's going to be rushing rate cuts for the next year, right? So that puts a question mark over the whole entire global growth situation. Now, China's already struggling. What we see is the commodity currencies, as I was just explaining, Aussie, Kiwi, CAD, they struggle, right? They don't necessarily rally as much on weaker numbers that you would expect, right? So, but with that, you also get the safe haven trade, right? Swiss and yen are starting to enjoy a little bit more sunshine as the global growth story unwinds as well. Now, don't forget the BOJ have already hiked rates, right? Gives it that fundamental push. And this is where I was coming back to on Friday, looking at the best trading opportunity. It's been a long time coming, but the yen is now potentially our best trade, right? So the now, I was looking at the opportunity here, looking at the daily chart. It was a good cracking chance to get into the trade and just hold the position, smaller position, bigger stop loss, and hold that trade, especially if we got weaker US non-farm payrolls and unemployment rate, a blowout in the unemployment rate. And that's sort of what we've got. Now, you don't have to be a rocket scientist to work that one out, but hopefully it helped a few of you out. So what have we got today or this week, right? Now, if I just get I'll come back to trading economics, easy calendar to follow. Now, there's a couple of key things coming out, and there's a lot of secondary numbers now that the heavy sort of head kicking non-farm payrolls is out of the way. We do have a few things to look at, and especially with euro, with this new sort of breath of fresh air that's got up at 109. Now, there's a bunch of S&P PMI numbers out of the US. These are all final numbers, even out of Europe, right? I'd say Monday's just a feeler. Like, don't jump into the markets Monday thinking this is the best opportunity, because it's not. You come into Tuesday, it's going to be interesting what the RBA does, right? Now, they've had their head in the sand thinking no change of interest rates for like a year, right? But that's changed very quickly. And the market is now factoring in potential cuts as early as November. So no change expected, but we might see a change in their statement, right? Their general forward guidance. You know what? Everything's fallen over. We may have to cut rates, something along those lines. And that will give us a potential opportunity in the Aussie. Now, don't forget, when the UK have cut rates, yeah, sterling went down a bit, but it's now coming back on weaker US numbers and the prospects for more confidence in the economy, because you know what, they've got lower rates. It invigorates spending, business growth, etc., and all those sorts of things. So you come into Tuesday, RBA, definitely worth a look. Now, no change expected. So that's the key part to it. So if there's no change expected from the central bank, you've got to be careful. You get the statement, you get the press conference. There's a few things to unwind. Come into Tuesday, retail sales figures, factory orders out of Germany, retail sales, Switzerland and the Eurozone. And then you've got the Kiwi employment numbers, right? This would be very interesting to see how the Kiwis go, right? Interest rates in New Zealand are 5.5%, the highest out of the developed world. That's got to change very quickly, right? Once again, they are not immune to global growth situations. So then you come into Wednesday's trading. We've got the CAD IBPMI, a really good historical number. Halifax house prices in the UK, and the Bank of Canada summary of deliberations. This is like the mid, where they have meetings every sort of month or 4 to 6 weeks. This gives us a bit of insight into what they're talking about here and there, right? It's like the minutes. Okay, so we want to keep an eye on that. Thursday, okay, we've got some balance of trade numbers. Now, the balance of trade numbers out of China are epic, right? It's such a massive number. Now, I wouldn't really look at the balance of trade numbers anywhere except for China, because it is a big thing, right? So we want to have a look at that. Important for Aussie, Kiwi, and probably the CAD. Then you got the weekly jobless claims on Thursday. So pretty sedate sort of schedule. And then you come into Friday. Once again, the inflation numbers out of China, hugely important for Aussie, Kiwi, CAD, more so Aussie, Kiwi. We've got the final inflation numbers out of Germany, usually close to the mark, like most things German, very consistent. Consumer confidence in Switzerland, it's definitely worth a look. I mean, dollar, like the Swiss is rallying, so I don't know what's going to happen there with those numbers, but we want to have a look at that. And then you've got the Canadian employment numbers on Friday to end the week, right? So, you know what? If I had a chance these countries ask me, what should we do with the numbers? I'm like, can you make the employment numbers like Wednesday, right? Because then we get a couple of days to trade the numbers, and then you get to see how the market settles down after that, right? Because you know what? Even those US non-farm payrolls, if we got the market to sort of trade for an extra couple of days, we have got clear direction, right? Weaker dollar across the board. Even the factory orders, right? I forgot to mention that. They were weaker as well. You know what? The reaction in the US numbers now is what I was expecting around March this year. Now, for whatever reason, it has been extended to August. I tell you what, things are going to kick off September. And these guys, I mean, they got their hands full. And this is the opposite end to a hiking cycle. You come through the data, it all starts to become weak, and then it's a race to the bottom, right? They usually can't keep up. So if you look at the Federal Reserve, right, and you can sort of go through various aspects here. You look at the whether you're looking at the implied numbers up here, the implied rate, and the basis points cuts coming. Look at this. I mean, June next year, 200 basis points of cuts expected, right? So the US, they are rocking and rolling, and it's going to be on for young and old, right? So we are going to be having a look here. September, 100% chance of a cut. November, 100%. It's just rate cuts till the cows come home. That's for the dollar, right? And you know what? If you had a look through the rest of the developed countries, it's not too dissimilar. But I'd say right now with those weak US numbers, it is a lot more aggressive in the US. ECB, okay, cuts, okay, same thing, right? This is where it's going to get interesting because, and if anything, a little bit tricky, but we will have loads of opportunities as we go forward. All right. And outside of that, all you need to do is reconnect with the market each day, see where momentum is going. As I said, the situation where we have, if I just come back to those global charts, you know, we're sort of talking about a weaker dollar, right? So everything should rally. But then you've got global growth issues on the commodity currencies. We've also got the safe haven trades kicking in as a bit of a like, there's doom and gloom coming. So you buy Swiss, you buy yen. So there's a few tricky things to maneuver. The best way to work out what's going on each day is come back to the global markets, have a look what's going on in the general markets themselves. Now, equities lower, right? US equity futures lower. And you're like, well, hang on, aren't we looking at rate cuts in the US? Yeah, we are. Interest rates, the treasuries are a lot lower, right? So you'd think they'd be up. So there's a bit of a mismatch here at the start. You look at the major currency pairs, some are up, some are down. Now, the markets have only barely just opened, so don't get sort of carried away. But you know what? Things are mismatched just at the moment, right? So just be aware of that. We are keeping an eye on any sort of geopolitical news. But when you do come back to the market, if you see, say, the bonds and the equity, so if these are down and the equity is going up, we should have a risk on profile, which means euro, sterling, Aussie, Kiwi up and the dollar down. That's good market conditions, and you can sort of start doing your work around trying to find, okay, which of these instruments is going up, which of them are going down, and then piece it together from there, right? It's going to take a little bit of knowledge on that, and I'll try to keep you up to date as much as I can. And that's where we are, guys. It's going to be an interesting week, especially with the RBA Tuesday. You got to wait till Friday for the CAD numbers, but there are bits and pieces in between here to keep us interested. Let's see how it unfolds. Good luck and happy trading.